Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data, the earnings, and the SPY for the week of March 17th, 2025. And with that said, let's go ahead and jump straight into the data. Now, we don't have a whole ton of data this week, but we do have some important ones on Wednesday. Now, for Monday, we have the retail or the core retail sales data at 8:30. And we have the retail control data at 8:30 as well. Other than that, nothing too important that day. On Tuesday, we have the building data and the housing data at 8:30 in the morning. Then we have the import price index at 9:15, so 15 minutes prior to open. And then at 1 p.m., we have the 20-year bond auction. Now we should see the yield come in lower on that, as the yields have been coming in lower throughout all the treasury auctions over the last few weeks. There's really nothing to raise the yields right now too much. Now, Wednesday is a really important day as we have FOMC. That's the interest rate projection, the interest rate decision, the FOMC statement. That's all at 2 p.m. Then we have Jerome Powell speaking at 2:30 p.m. So there's going to be a lot of volatility that day, so just be aware of that. Now, Thursday, we have a lot of different data sets, but mainly it's just the jobless claims. These other data sets aren't going to move the market too much. We do have the Philadelphia Fed Manufacturing Index, but again, I'm not really anticipating too much out of that. With the CPI and PPI data coming in cool last week, I do expect the jobless claims to tick upward, and that seems to be the consensus as well. Now for Friday, not really a very big data day at all. We only have Fed member Williams speaking, and then useless data sets there. But the important thing about Friday is that it's OPEX, so that's when billions and trillions of dollars worth of options expire out of the money. It's a very put-heavy OPEX this time around since the market, is in a correction. So just keep that in mind. If the OPEX is extremely call-heavy, we usually see it sell off. If it's extremely put-heavy, we usually see it buy upward. Yeah, we'll go into OPEX more when the time comes. Now, I'm not going to pull up the earnings page because there's really not many earnings to go over this week. We only have XPEV on Tuesday in the pre-market, and then Thursday we have Micron and Quantum Computing, which is MU and QUBT. But other than that, we do not have any important earnings this week. Now, the MU earnings, the Micron earnings, can be fairly important, so just be aware of that. But more than likely, they're not going to hold a whole ton of weight for the market right now. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. Now let's go ahead and jump into the SPY TA, and I'm just going to preface this. I've had to record this video twice now. This is the third time because my mic has been messed up, so if I go through this pretty quickly, I apologize. Just this is literally the third time I've had to record this exact same thing. So going into the moving averages, and as always, if I say MA, that's moving average. So if I say like the 5 MA, that's the 5-day moving average. The SPY closed at 6. SPY closed at 562.81 on Friday, and the 5 MA is currently at 557.92, which means it's very likely we're going to see the 5 MA open around 559.30. Give or take, it'll be in that area, very close to the 560. The 10 MA is still quite a ways away from us. It's at 568.19. The 20 mile is at 584.58. The upper Bollinger I'm not going to discuss right now. The lower Bollinger is at 545.07. And the 200 mile is at 570.38. So what's going on essentially is that we have the lower Bollinger. We've pulled away from the lower Bollinger. We finally had our 5 mile test on Friday. The market pulled above that slightly, as currently even in the overnight market right now, we're at 560.12. We're still under all the other supports, so we're still under the major 200 mile. We're still under the 10 mile, and we're still under the 20 mile. So we're in very bearish territory. Generally, when you have the 5 mile tested after the lower Bollinger move, it will choose between the 20 mile and the lower Bollinger. So seeing just a visual example, and I'll explain these boxes in a second, but a visual example would be for that to go to the 20 mile right there, or for that to head back down to the lower Bollinger right there. Those arrows kind of look wonky and cool, but as you can see, decent move upward and decent move downward still in the cards. Now, going over my drawings really quick. On the daily chart, you can see this is when the Trump rally started. That's literally when President Trump was elected, and the market ran really, really hard, pulled down, and created a large inverse cup. At the top of an inverse cup, so if this was a bullish cup, then the top would be at the top, but since this is an inverse cup pointing downward, the top is, technically at the bottom of the cup. What I look for on an inverse cup is for a bullish structure to build at the top of the handle. And the reason for that is so that it can give us liquidity to, build the handle upward, whether it goes all the way to the top of the selling channel again, the bottom of the buying channel, or, if we just have a basic 20 mile test in this area. Both the bulls and the bears are on the same team right now, because we both want to see the same move happen regardless. So with this being bullish liquidity, and it does look like good bullish liquidity, it does look like we have an inverse head and shoulders going on here. Very likely we will see that breakout. Very likely we'll see this cup and handle form, giving us the breakout. And what we're looking for is for this gap right here to be broken, because this is a multiple day gap. This was all last week's trading, and this gap is between 549.68 to 566.42. So we're looking for the 566 essentially to be broken out of. And once that gets broken out of, we then want to start looking for either the 20 mile, which the 20 mile test will be in this area. Don't need to have lines turned on, I want to circle. Will be in that area. So likely breaking out, doing a 20 mile test in there. Either that's going to reject downward back towards the 5 mile, wherever the 5 mile is in this area at the time, or it's going to head back down to the bottom of the channel to complete the inverse cup and handle. If that does not happen, then this is going to start forming a large cup, which that's a bullish thing. If bulls get enough liquidity here, they can, break right out of this channel, and that's something the bears have to be careful of, because as we start building the bottom of the handle, that was meant to be just a circle. Once we start building the bottom of the handle, this is the area where the bears have to start building a bear structure again and pull us downward. If not, then the bulls will just use this as liquidity to break us out of the selling channel and head back into some sort of buying channel. But I don't see too much downside right now in terms of like immediate drop or anything. I do believe that Bulls and the Bears are currently going to both work together to build liquidity upwards. But if that doesn't happen, and we do see further just, breaking down, then very likely we'll see some sort of head and shoulders form in this area that will, continue to give us liquidity to break down, um, underneath this large liquidity area that I talked about last week. And that's a major gap I'm looking at. So I'm really looking for any downside to be around that area. That should be later in the week, just based on the channels and everything right now. But that can always dramatically shift, depending on the data sets and everything throughout the week. So what I'm really focusing on over the next few days is I'm really looking at the VIX, so volatility. I'm looking at gold, and I'm looking at the bonds, because the bonds did not move at all last week when they should have been rallying on really, really cool data. The data last week should have taken TLT above 96, and it barely moved it to the 90 mark. Gold, a lot of money was pumped into gold into volatility, so if we start seeing gold pulling back, and if we start seeing, the VIX pulling back further, then those are, good signals that we're going to continue heading upward. The one thing I do want to end this video on, though, is that Bank of America analysts expect this sell-off to still pull another negative 5%, which, if that does happen, that pulls it directly to this 536 gap, which I thought was, pretty coincidental. But the other reason why I brought that up is because the BOFA analysts have been pretty on point over the last 6 to 8 months over just the rate decisions and price targets and things. So, not that I focus on analysts too much, but I have been listening to them just a little bit more. With that said, we are going to go ahead and end this video here. I think we discussed everything. I do believe we discussed the ADL. I'm going to quickly go over that just in case I didn't. This is kind of like a channel right here, and I can't draw on this ADL exactly because of the program. But if I were, this would look like a consolidation channel. Look for the ADL to break out of that or to break under it. As you can see, it's been chopping this entire sell-off. So this is the money inflow and outflow. So pay attention to that. It's very important. With that said, though, I'm going to go ahead and end the video here. I hope everyone has a great week and trades safe tomorrow. And again, tomorrow's my birthday, so I'm going to be taking the day off, very likely. If I'm not around, that's why, but I will be posting a video later tomorrow night. So with that said, have a good day, trade safe, and I'll talk to you in the next one.